everyone, welcome to my channel. My name is Carolina and I am your San Diego realtor, here this week to talk to you about different types of home loans that you can get. So first I'm going to talk about the typical loans, the FHA and the conventional loan, but if you stay to the end of the video, I'll go over the USDA loan, the VA loan, and the jumbo mortgage loan. First, we're going to be going over the FHA loan, which means the Federal Housing Administration. The FHA loan is backed by the US government. It allows for more flexibility with your credit and qualifications of the loan. It's geared more towards the low and moderate income. The minimum credit score is 500 and that will create a 10% down payment. For the minimum of a 3.5 down payment would be a credit score of 580. And many lenders actually have a requirement of 620 to 640 depending on your debt to income ratio and a bunch of different qualifications that they go through. With an FHA loan, your mortgage insurance is required, so above the loan payment, which is your mortgage payment, you will have to pay a mortgage insurance payment, and that is insurance on the mortgage loan that you will be paying for it. The FHA also has pretty strict property standards. You can't really buy a home that's like dilapidated with an FHA loan. A fixer-upper sort of scenario is definitely not a house that is falling apart, that's uninhabitable, that has like city or county violations on it. The worse the house is, the less likely your FHA loan will get approved with the home, because it has to pass the inspection pretty well. If it needs a new roof, or maybe it's missing a wall because the previous owner took a wall down, then that's fine. But for you to get a house that has like tons of mold and rot, and a house that requires a lot more work, then the FHA loan might not be for you. The FHA loan also absolutely requires that you will be the primary resident of the home. The FHA has an owner occupancy requirement that a conventional loan doesn't necessarily require, and that rolls us into the conventional loan. It is backed by the stock market, specifically Fannie Mae and Freddie Mac, which are two federally backed home mortgage companies created by the US Congress. This is the most common type of loan with minimum credit score of 620. And it has fixed and adjustable rates, typically within 10, 20, or 30 years. The down payment minimum could be 3 to 5% depending always on the lender and the qualifications they gear for you. The PMI on a conventional loan can be canceled when the loan to value equal about 80%, depending on your down payment. For example, if you put 20% down and 6 months later, you should be at that 80% value of the home, so you can refinance your home and get rid of your PMI insurance. The USDA loan, which is basically a US Department of Agricultural loan, is loans for rural areas and some small suburbs. It's a fixed rate and it tends to lean towards the low and average income communities. It typically has no down payment and a reduced mortgage insurance. Here in San Diego, the USDA loan is geared towards Temecula, Alpine, Borrego Springs, Ramona, Valley Center, Julian, Bonsall, etc. The Veterans Affairs, which is a VA loan, is for veterans and active duty military. It usually allows a 0% down, no PMI, which is a great benefit, so you don't have to worry about having to pay 20% because the VA loan automatically comes without the property mortgage insurance, and it has flexible qualifications. The credit score, depending on, honestly, your service history, your eligibility, the qualifications have a lot to do with your military background and what it will allow for you to get as a loan. And now the jumbo mortgage loan. This one isn't really talked about too often. We get a lot more videos of like the FHA versus the conventional loan, but a jumbo mortgage loan is similar to the conventional loan. It just gets to exceed the conventional loan limits that are set, and it requires a 5% down. And in the state of California, if any conventional loan exceeds $820,000, then it becomes a jumbo loan automatically. So as usual, the quick facts on what today's video is about. The FHA is a government-backed loan. It allows more credit and qualification flexibilities for the low to moderate incomes, and the minimum credit score can be anywhere from 500 to 580 depending on your lender. The conventional loan is the most common loan. It's backed by the stock market and requires a 620 credit score minimum, and the minimum down payment can be anywhere from 3 to 5%. The USDA loan is a rural or small suburb loan. It's mainly more so for homes with land. I don't know how it works in like Texas and Montana where there's land everywhere, but in the state of California, especially down here in San Diego, it is in the county of San Diego. The VA loan is for current active duty and veterans of the military in any branch. They have a 0% down, no PMI, and flexible qualifications depending on your service history and eligibility. And again, the jumbo mortgage loan is just what it sounds. It's a jumbo loan. Obviously, it has different limits in different states for the different prices that we all have, but in California, down here in San Diego, the limit is $820,000 on a home. Thank you so much for watching. Don't forget to like, comment, or subscribe. Thank you.